Let's look at some chart examples of a range and some of the concepts we just discussed. So looking at Bitcoin here, we first just take a look at market structure. We can see we had a high was broken. We can just draw the next primary high up to here. We can see that it came down. We had actually a sweep here, move up, and we have a second high here. So the lowest point between these two highs is down here. Okay, then we had a sweep here. Okay, so we've got a new high, new low. So you can actually see here, when this high was made, we can see a range high. Okay, that was the initial high that's just been swept, right? Now, when I actually look at this price action, if you look at how it formed, I know because we're looking at a bar replay, we haven't seen all this play out. Matter of fact, let's just go back a few bars. Okay, if we were back here, right, and we saw this sort of thing playing out, we'd be looking at, we've got low, high, we don't have new low in yet, so we've got low, high, and then this is developing structure. See how it's contained within this low and this high? Got our range. Okay. Now, let's just go and draw a fib tool straight there. And remember, we talked about the concept of premium and discount. So if we wanted to be long on this range for positioning, if we thought this was going to expand to the upside, we'd be looking for setups in this lower discount area of the range. Now, if we thought this was going to break down, okay, this range was going to expand to the downside, we'd be looking for positions, we'd be looking for our short positioning in the premium area of this range. Right? So we'll use that as our guide, and let's just observe what price action does. We've got our range, looks like it's heading up. No, it's rejected off the range mid, and this is something you'll see regularly. When you draw that range mid and you've got your range, you'll notice the interactions. There's often a lot of interaction around the high, the low, and the mid. Okay. Come down. Let's see where we're going here. We can see we've taken these internal lows. Okay. Internal sweep. Gets a reaction. Okay. Where does it go? Bursts through this range mid, then is heavily rejected back down. Let's see where it goes. We're coming back down to those internal lows. Another reaction. We've just had a sweep of the range low. Okay, so in this instance, if let's say we didn't have a thesis, we didn't have a strong thesis, we didn't know if price is going back up or going back down, this is where we might have been looking for that range trade. Maybe on the lower time frames we saw our confirmations. We've got a daily confirmed sweep. Maybe we're looking for the close of that candle. We're looking to take a long, cover the low, because we're not expecting, we know that we're invalidated if price goes back down. And then we're targeting the other side of the range. So this is an example of just a range trade, because like we discussed in the previous, when we were explaining how ranges work, because we don't know which way price is going to go. Okay, we're getting that reaction at the mid. It's cleared the mid, taken out all of these internal high liquidity. It looks like the last point of liquidity is left up here. Good sign for our trade. Some consolidation. Okay, we're getting a rejection. We'll see how it interacts with this range mid again. And there we go. We can see that it's taken the other side of the range now. Now, the other thing we can think about is, okay, now we've closed our range trade. We've gotten our nice 2.6 return. We weren't expecting it to expand, or we didn't have a thesis for it to expand. So that's where, if we were purely range trading, that trade is closed. Now, if we were range trading the other side of this range, for example, let's say we took that as a signal to go short. Now, we'd be targeting back down to the range lows and potentially down to this low here. Okay. Now, the first thing I'd point out here, if I was just range trading in this instance, would I take this trade? No, I wouldn't, because I won't take a trade unless I can get a minimum of 2R risk to reward. Now, that's just me in my system. As you develop your own system using these foundational building blocks that I'm teaching you, you might have your system optimized for a 1.5 return. So you might take your trade because you can get your 1.5 return. That'll be up to you in your system. But in my system, I wouldn't take this trade. However, if I was thinking I had a strong thesis now that I thought, okay, this range is coming, let's say Bitcoin's topped, for example, and I think we're coming down to, at least these lows, or to fill potentially some of this inefficiency in this run up. Maybe I'd be targeting down into, some of the inefficiency down here. Now that, in a trade where I'm looking to position for an expansion for the downside, that this is where I may start positioning, because I'm in premium. So I'm getting the best price for me to be short on a range breakdown on an expansion to the downside. And I've just got my first trigger to start positioning into this by way of this SFP. So we'll just play it along. Okay, we get some, we eat some drawdown, let's say. But that's okay. We just trust our stop, our invalidation. This is where the trade is actually invalidated and our idea ends. Okay, so we'll just let it run. You can see it's having that reaction towards these lows again. You can see this interaction at the mid again. So once we've gotten below this mid, it's still consolidating and rejecting under the mid, okay? There we go. We've got that range breakdown and we've got that move to the downside. So you can see here how, because I had the thesis that the market was going to move down, and I know this is a bar replay, an example. I know exactly what the market's going to do because I've seen this price action before I showed you this video. It's not the point for me to be right or wrong in the trades in this, because of course I'm going to be right because I've seen it all. I'm not actually trading the thing, but I'm just showing you how to relate the concepts that we just learned into the actual price action. Okay. And then you've got your trade. Now, if that was your final target, again, this comes back into your system, how you manage a trade, how you take your profits, how you potentially trail versus fully close at certain targets. That's all up to you. But you can see the core foundations of trading the range, how to approach the range in terms of range trade versus position trade for an expansion out with the range breaking down, and how to use those actual concepts that we discussed.